Okay, good morning. I'm busy typing and talking over here. Welcome to Monday morning at 8 o'clock, the 20th of October. Holy smokes. I didn't even know I was off and running here until I heard the bing bong go go off. He's busy typing on the Discord here. Yeah, so this is welcome to virtual risk neutral trading. This is my virtual journal. It's not for financial or trade advice. There's a disclaimer in the description. All the usual stuff. Past performance is not indicative of future results, et cetera, which is, by the way, one of the most important statistical facts you'll ever hear. And most of us traders blow it off. But anyhow, the purpose of the stream is to be my virtual journal. I capture everything that's going on, obviously, on my screens. And my voiceover here provides some insight as to what I was thinking, which is important, sometimes scary, but important, and real interesting to go back and review the trades. And sometimes I go, how did I see that exactly? You know, it's, you think you're firing on all 8 cylinders until you go back and actually listen to what you're thinking. So the narration's really important. Obviously, I could record anything I wanted to record here, video-wise, but the important piece is missing. That's why I do the narration in the live stream. Live streaming to YouTube helps me because I can review on any device, which is pretty damn important. I stand up. I have standing desk here only, and I'm up, a little before 6 till around usually 2200 at night. So that's quite a day for an old man. Okay, let's see here. Looks like the stream is trickling along. That's just magic. Love it. Really pretty incredible, all the technology that we have at our disposal for free. It's quite surprising for me. I mean, it's a pleasant surprise. But so let's take a look at where the hell we are and where we're going here. This is my book map. Let's get right into the reports, which are, I hope I have them open over here. Yeah, there we go. Really nothing so far because the what you call them, the juvenile delinquents back in D.C. can't stop arguing with each other, I guess. I don't know. This is Investing RT. My news sources are free, and I keep them that way on purpose. I prefer Investing RT here, investing.com, because I can... I like the presentation for screen snapping in and dropping it into Discord or somewhere. You can filter for your time zone, any kind of reports you want, 2 stars, 3 stars, whatever. We're also, it's important to remember, we're also in earnings season now. Today, obviously, is pretty weak, but coming out of the gate tomorrow, we've got, Coke and Netflix, and we had the financials pretty much last week. Some of obviously they'll continue, but here we go. So this is investing.com. The other one, which I have that I haven't even opened yet, so you can tell what I've been doing, is Financial Juice. This has got a similar function of the calendar or the docket, but it has more of a squawk box going on this right side over here. It is also free, and you'll see this thing. If you don't, if you keep it free, you'll see this pretty much every time you get a screen scrolled up there. So those are the 2 news sources I use. And now the pre-market here, we have a full session. This is the RTH close from Friday. Sunday night's opening. Boop, 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 boop. We have kind of pretty much of a balanced ETH so far. Here's our open. So you could say that inventory, it's pretty well balanced. Inventory is just about 50-50 here, I would guess. This is the market profile. First of all, this is the ES mini. This is the NQ mini. Sorry, I don't have that right. And this is my higher time frame chart, which is the micro composite. It is a full session. I'm sorry, the RTH session. Let me change my lighting around here. My eyes are really bad. It's the RTH session. And these are daily candlesticks. Wherever price overlaps, I draw a volume profile around them. This big, oh, we're going to, you know, this random political risk that we, you know, have no idea. That's the new environment we're living in, we're trading in now. This is Trump at 10 o'clock in the morning on Friday deciding he's going to he's going to increase the tariffs on China over 100 and something %, and the market dropped off 227 handles. Starting that afternoon and the next day, all the administration did was walk all of that back, and pretty much has unwound the whole thing. But you see the effect of the market. So I've kept it as it is, and I'm not sure whether that's right or wrong, but hey, it's my way, so there you go. Now, by drawing this volume profile, I get the high and low volume nodes, which are these red and green lines. They're just marked the high and low volume nodes of this volume profile. Those high and low volume nodes push to bookmap, as do the session prices up here. And then this is the market profile, of course. Bookmap. Boom, there we go. So here's Blue Boy, top secret, extremely valuable, cost $1 million. Indicator. It's a vertical line. Oop, boop. And I slap that on the session start of each session. My thinking is that I can glance left. It's just a visual clue, right, or cue. I can glance left, and if I see that blue line, I know that I have the entire session in view on the chart, and that gives me a continual, accurate flow, concept or feeling of context for the session so far. Here's our open, traded down. Now, if you look at this one, compared to the open here, we're pretty much, inventory is long, eh? Isn't quite so obvious on the IRT, to me, but And what do I mean by that? Well, just look at where we've traded above where we closed. There's the close right there. Isn't most all of the inventory of the trading above the close? It is, isn't it? So there you are. I'd say we're long inventory. I would expect responsive selling to take profit on the open. And then who the hell knows what these idiots are going to do with it, really. I mean, this is pretty much of a crapshoot these days. So you just have to trade what you see, not what you think. Have a structured trade, which I do, and which I'm vetting. So, you know, there you are. Welcome to the, welcome to trading 2005, I guess. And this crazy environment that we have with this, you know, unscheduled, potentially hugely critical risk right here. And if you have any question about that, there you go. And this is absolutely nothing political. You know, I don't care if it's the man in the moon or Joe Blow or whatever. Trump jumps on it, puts a post on a social media, a private, whatever that's called, social media, not a news, a press conference, not anything like that, not backed up with any kind of data or based on this report from China or this, you know, blah, blah, blah. No, he just comes out with a post. I'm going to put this on, and there you go. Now, there is no freaking way you had any idea that that's going to happen. That means it is an unexpected critical risk. And this is not the first time. So, in my opinion, if you're going to be a successful trader in this environment, you better keep your the amount of time that you expose your account to market risk to a minimum, and only take A+ trades. Always have a bracket order in market, you know, just stuff like that. Nothing political at all. At all. So please don't misunderstand me there. So here we have now to the point. Here we have Bookmap. This is the DOM. In case you don't know that, these are the session prices. This is resting liquidity. Here is the micro composite column where I enter these things manually, the VPOC and that kind of thing, which is have to look at that again. This is the high and low volume nodes, and this is the full session volume profile. This started plotting at 1700 last night. Here is the RTH session volume profile, which will reset this morning at 8:30 when we open. This is an important column for me now. This is my notes column, and the first thing I do is establish what I expect the overnight, or what I expect the open type to be, and there are only 4. And the great part about it is there's only 2 criteria. If we opened right here, right now, how would that compare to the previous close? There's the previous close. We would be higher, right? How does it compare to the previous session? Well, there's the previous RTH high. What are we going to be then? Well, this open type looks to me to be higher out of range. Yeah, we are higher and we're out of range. Real simple, isn't it? Now that will dictate which statistics column we apply to the session prices, which are here. They come from Bookmap or from IRT. And so the next thing I'm going to do these are the statistics from Friday. Let's just clear those bad boys out, and then we'll do the statistics again for today. And I do them every day in the pre-market. But going one step further, these are the session prices, which are pushed automatically from Bookmap, from IRT to Bookmap. And you'll notice there's no indicator on my charts or my Bookmap. Unless you want to call the VWAP, because it is calculated an indicator, then fine, there's VWAP. I have the VWAP for the Globex and the RTH. I have a mid for the RTH. I have a POC for the, and where did that go? I have a POC, which is a brighter yellow for the RTH, and a more muted yellow, if I can find one here. There you go. A more muted yellow for the full session. Now, this is where IRT had recorded that. I'm going to put this down here just as a kind of a precaution. This is this is the location of, per IRT, this is the location of the last POC when we closed Friday, and whatever day Friday was. This is the 19th, 18th, 17th. Okay. So that would be the naked volume point of control for the most recent auction. And my workflow is, once a level has been revisited, I change the text to black, and then I try to take them off my charts on the weekend. And as you can see, I didn't do that this time. Okay, so that's how I do it. And then I would go like that. POC. Nothing magical or mysterious. There's nothing that I do that's not data-driven and completely logical and based on statistics or probabilities in trading. The POCs, nothing mysterious, simply mark the price at which the most contracts have traded so far in the session. So far in the overnight, we've traded 2,761 contracts at 69.70 or 19.75. The minute one of these other prices is 27.62, this yellow line is going to move there. That's it. Another line that sometimes are level that sometimes confuses people is the IB high and low. I think because of the naming, it's from market profile days, and it stands for initial balance. But let me let you in on a little secret. What these two levels really represent are the high and the low of the first 1 hour of the RTH trading session. And that's it. Period. So when the market opens, this is going to move up. The low will move down with price. And at 9:30, they don't move anymore. Very simple. All right. Let's look at our statistics over here now and see how those beauties work. Well, here's where now this is IRT, investor.rt by Linsoft. They conveniently highlight the correct open type after the open, right? So this was Friday. Here we expect to open higher out of range. This is very, very simple as usual. Data-driven statistics. This study looks back at 2,000 trading days. Of these 2,000 trading days, price revisited. When we opened higher out of range, it did so 512 times. Of the days we opened higher out of range, we revisited the overnight volume point of control 414 times, which is 80.9. Now watch this. This is really difficult. Here's how you do this. Really pay attention. That's how tough it is right there. This statistic will stay there. Now, this is the overnight volume point of control. And so we're still in a live market. This may move with price, okay? When it does, then I'll have to move this value. But basically, the rest will stay the same. Then I'm just simply going to go down the list. The overnight high is 76.2. There's the overnight high. And again, that one may change because this is a live dynamic market. Previous high, 66.2. This won't go anywhere because this is from Friday. Okay, and where I'm heading for something here. I have a mission in mind that I want to show you here in a second. The overnight mid is 65.2. And where'd that go? Right there, I'm guessing. No? Yep, right there, 65.2. Whoops, what happened there? Okay. That looks a little bit off. Let's go down one tick. Boom. Yeah, well, call me a liar. The overnight high, that's what I was looking for. Or the IB high, that's what I was looking for. Now that's 64.8. You see that right here? Overnight high right there, 64.8% of the time, 332 instances out of 500. And here's the IB high from Friday. And this is 64.2. And I go IB high because remember the definition. The minute we open this flag, this line, this level, and the, let me just say that the level in the cloud notes and these lines in this indicator are driven by the exact same data exported at the same moment from IRT. So it's nothing. That's also nothing, secret. The minute we open, the IB high is going to move to the top of the initial balance. And if we open up here someplace, it's going to be up here. It's going to open to the highest price of the session so far in the first 1 hour. Boom. And the low will be below it. And they'll just continue to move with price. The high will go up. If price goes up, the low will go down. If price goes down, and that's it. And at 9:30, they don't move anymore. And then the statistic comes in, but we'll talk about that later. What else do we have here? Then we have the IB low, which is 59.6. And I got to imagine that's way down here someplace in the corn patch. Right down there. Look at that. It was a hell of a Friday, huh? 59.6. Is that what it was? Now, yeah, Friday we had like an 80 handle IB or something ridiculous like that. And look at the previous low down here. Holy smokes. Where is that while we're down here? The previous low is, no kidding, previous low is 12.3%. Now, let me say something right now, which is really important. These are just statistics for the number of occurrences where this price level was revisited when looking back over a 2,000-day data set, and we opened higher out of range 512 times. These are not hard pass lines in the sand. This is not some sort of guaranteed thing that's going to make you $1 million. No, these are probabilities and statistics. That's all. 48.0 is the previous close. So let's get back up here to reality now. The previous close is 48.0. And I hope that it was, it should be obvious to you if the close and some of these other statistics are in the 40s, how the hell are we going to get down to the IB low? 40. Well, you don't even have to go that far. Here's the previous close is 48.0 and the IB high is 64. Well, if we're going to get to 64, we're going to have to get through 48, eh? These are just the probability or the percentage of time that this level was revisited in that data set. That's all there is to it. Okay, I don't know. I'm sort of the overnight low. Let's look at that. Where'd that go? 35.4%. Okay, now I need to do something that I do every week, every day. And that is the TLab snap. And I'm late, but you know, what are you going to do? The TLab snap is something I do every day. I do two, actually. I do one at about 6 when I post the numbers, and I do one at about 8:20. And those are the following. This is the snap that I do of this. It's just, the TLab is a bookmap Discord chat room started by a guy named Tom B., who's a professional trader, I believe, about 46 years of experience or so. He doesn't call trades and he doesn't trade live. And I'll bet you $1,000 that you will never see a wrapped Lambo or a gold chain in the TLab. And it's a bookmap Discord chat site, right? It's not a, yeah. But the important thing is he's got a lot of good values and a lot of good things to say, and you will never be solicited for anything in there. It's not typical internet guru bullshit. And it's the only place I recommend this public, including any of the other bookmap Discord sites. Because I've certainly not been to them all, and there's a lot of them. I have been to 2 others, and they were typical. The third word out of the guy's mouth was trying to sell something. My indicator, my mentoring, this or whatever, which is great. And if that's what everybody wants to do, them and bookmap, that's super. But that's not what I'm interested in. Therefore, I don't recommend that. So that's the TLab. Now let's get on with the business at hand here, which is, I suppose it would be important to be able to trade, would it not? The way you trade with bookmap is you have to activate the trade control panel, and you select a way that you will interact with the application to trade with your mouse. If you choose chart, the only place you can trade with your mouse is this active data column. See how the mouse pointer turns to a $sign from an arrow? Okay, if you choose DOM, the only place is the DOM columns. And if you choose both, you guessed it, both columns. The next thing I do here is I use multi-brackets. And this is where the risk neutral, I changed my data type, sorry. This is where the risk neutral methodology is applied. This is the smallest risk neutral package you can use because it has to be an even number of contracts. So you select the amount of contracts of your package, an even number, 2, 4, 6, 8, and you also select the number of ticks for the stop of the complete package. Now, the way you determine that is 100% based on you, your account, the risk parameters of your account, etc. If you're a prop guy, what's the daily loss limit? You know, all those things. You have to, the volatility of the market, you have to figure all that in. After you've established this, the first risk neutral trade or the risk neutral scale, the first profit target is automatic because it is for half of the package and it's for the same number of stops or ticks positively as the stop loss is negative, and then you have a runner. If you want to go to some other goofy thing, there you go. There's a 4 lot. Here's a 4 lot in high volatility. This is back in April when, you know, Captain Goofy was putting tariffs on it, islands full of penguins. I mean, Jesus Christ. So there you go. If it wasn't so serious, it'd really be funny, wouldn't it? Now we've selected that, and I want to point out something. You see that I have all these position metrics up here. Same as right here. I don't need any of the other tools in the trade control panel. So what I can do is confirm the package size, click the button again. The trade control panel stays active. I can trade. It's green. The padlock's open. But I have all my metrics here. I have a cancel all and a close all button. And there you go. Now we're set up to trade. And now we've got about 3 minutes till the open. I probably forgot something, but, you know, sorry. I'm going to grab some water and bio break and get ready. Okay, what happened? Who's on third? Where are we? Well, one thing I'll point out to do with the stream, etc. I told you about standing desk and blah 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 blah. Well, the idea of the stream here and streaming to YouTube is for complete transparency and accountability. I take no trade off the stream. The stream starts every trading day at 8 o'clock in the morning and runs through continuously live and direct until 1500 in the afternoon. That's 7 hours. You'll notice that the stream includes the entire monitor, not just the application. So you can see any things that I've got open at the bottom. There's Rhythmic. There's my screen snap guy. There's Bookmap. There's IRT. And you can see the clock in hours, minutes, and seconds, Central Standard Time, and the date. Ties back to the date on the things. Absolutely I want no question about accountability or transparency, because remember, this is my virtual journal. The voiceover is how I get what I was thinking into the recording. Stop for a second and ask yourself, who would I be trying to bullshit? Me? You know what I mean? It's pretty stupid. Huh? I'm not an internet influencer guy or a YouTuber person. I don't ever trade in a rearview mirror. You know, when I take a trade, it is very clearly graphically displayed on Bookmap. There is an entry. There's a green line that shows break even. There's a stop. There's targets. Any movement of those are very definitely recorded. And in case you're not familiar with Bookmap, here you go. Ah, damn it. Well, this kind of shows it. This is last week, I think Thursday. Well, it's right there is the date, the 28th. There's the entry. Stop, T1, T2. The minute T1 is achieved, risk neutral scale, break even goes to the stop. I never change anything. Wait. Market plays out. There's my T2. 60 ticks. There you go. That's how it works. That's how it's displayed. And we're open. And we didn't reset here, which is just freaking annoying. I don't know why that's doing that. But you'll just have to listen to me bitch and moan. Ever since a couple of updates, for years, this worked exactly correctly. And, now it decides that it doesn't want to. It beats the living shit out of it. I even have this set up so that you have to, in order to do this, you have to run Rhythmic as administrator, and it will update your computer clock to the Rhythmic server clock every 2 minutes. So the story goes, I don't know. I'm really over it. But anyway, now that I'm through that rant and raving, you'll see that the IB high hasn't shifted yet. And now I'm going to change my charting from full session to RTH session, like that. Save that bad boy. Come on. These are milliseconds of lag. This is the micros. I'm going to start something new to see if it makes a difference here, I think. I'm going to start resetting the damn, resetting everything at, did I save that yet? There we go. So here's our micro composite, and there we have open. We're in another freaking gap up again now, right? So let's take our previous RTH high. That's right there is the gap low. This is how I do that. Sorry, I didn't have it done previously. Wasn't thinking. A little sleepy here. Come on. And this is the 1710. Up. And this is not the POC, is it? No. This is the MC gap low. 10, 25. Wow, that was painful. And now we're going to go to the open, which is this little pink boy right here. And that is the gap high. I use range to open. I don't use settlement or do whatever you feel like doing, What are we doing? The 20th, 10, 25. Okay. Boop. Now, I'll plop this flag here. These migrating VPOC flags is OCD, and it's something I used to do a lot. And I'll explain how it works and why I don't need to so much. First of all, turn your heads unless you've paid your $10 million, because I'm going to put my secret indicator on here. There you go. Oh, did you peek? I throw this blue boy on at the session start of each session, and I, try to get it as close as I can. And this is nothing more than a visual cue. I want to be sure when I glance left, I can see the blue boy over here, because that tells me that I have the entire session in range. Therefore, I have no excuse not to have a good, firm understanding of context. And I don't trade counter trend or counter context. That's the plan. Okay. I also try to keep 1 point high on the price scale, which we're at now. And the reason for these migrating VPOCs are, There's another one. I'll show you how this works. Previously, I would keep the time scale at 5 minutes, which we happen to be right now. But and you'll see that this yellow line, remember, this is the POC. It is a price, just a price at which the most contracts have traded so far in the session. The yellow line just plots where the price, where this has been, where this POC has been. To give you some idea, is value and the accepted price moving higher, moving lower? That can be some insight. Well, if you keep this at 5 minutes, pretty soon this will scroll off the screen. So I would use these migrating VPOC flags. I don't do that anymore. I use the blue boy here. Again, nothing more than just a vertical line. And I keep the entire context in view all day. When one of my potential setups is, starting to develop and I anticipate interacting with the market, I can zoom in as tight as I want to zoom in for price action. That's the story. Peter Lorre. We still have a 2 millisecond lag. This is a new, it's 2,500 or something like that. Gigabits, ether or fiber optic. Let me just point out something that's visible right now. You see how the line here is up at 50 and the flag is still down at 48.5? That is not a bug or a problem. That is very simply the smallest refresh time I'm able to set in the cloud note column is 1 minute. Whoever the boys and girls are that developed this indicator, which you buy from Bookmap, obviously did it less. So now they're aligned again, you see? So this will jump and then that'll follow. And you see that the IB low is down here below us. That's because when I clicked the reset, we had more volume in and this is missing. So what I'm going to do now is go clear resets. And there we go. Now we're correct. And while we're talking about it, and I'm still pissed, I'm going to reconfigure this stupid thing. This is how I used it for years. Literally. Worked like $1,000,000. Now it seems to be that I need to do that. And there's a session start, and that's 8:30, and okay, get away. Now, what was happening with that session start was, and I assumed it had to do with the clock, it would be, 10 seconds or something ahead. I don't know how the hell that can happen. I don't care. I mean, obviously, I'm comparing that to my computer stuff, and I've got 3 computers in here in this office. Right in front of me here is a 4 monitor rack. The 2 lower monitors are my trading screens, and the 2 upper monitors run off another machine. Then there's a vertical trading screen, trading computer monitor to my left. I have 2 standing desks and an L. And then further around the corner from that is a 3rd computer. So, I'm kind of looking at all these times, and they all align, right? So because they're all on the same Wi-Fi or the same LAN. So and all of these clocks reset. I have a special task on every one of them to recalibrate the clock to the time server at 7 o'clock every morning. So why this is a problem, I don't know, but it's just irritating, as you can probably tell. So here we go. Now, where are we? Let's see. Try to get back to the something or other. Well, we're in gap rules. That's always a lot of fun, huh? So gap rules. 39. Oh, 39. 40. Okay, gap rules. What are they and who the hell am I talking about? Well, I just pointed out that we've opened in a gap up. There's the open. Down below us is the previous close, or the high. This is how I do it. And if you look over here, you see clearly a gap. So the statistic says, and this is an old market profileism, if we close the gap relatively early in the session, and if price is accepted within, maybe easier to see here, if we close the gap relatively early in the session, and price is accepted in the previous range, and more importantly, previous value, we have a high probability of trading across that previous value area. If not, which is what we're looking at right now, is a gap and go. So gap rules. Now we can also look at this, which is interesting. Am I on the right? Yep. Okay, here's the statistic study again. Remember, 2,000 days, we opened higher out of range. What's that mean? That's a gap up, and this is a gap down. So higher. So what's the probability that we revisit the previous close or the previous high? Let's look at that. Where did that go? Can't even see anymore. So 66.1% of the time where we opened higher out of range, gap up, in other words, 513 days out of 2,000 days, pretty much 25%, we opened in a gap up and we revisited the high 66.1% of the time. So we have a 66.1% probability that we will close the gap. Boop. Statistics. Isn't it cute how that works? Takes all the wizardry out of it, doesn't it? Now, I would prefer to have you all think that I wear a big, tall, pointy hat and have a magic wand and a staff and stuff, but, you know. I'm not that good a con guy. And here we go, trading higher. We have the RTH, oh, and this moved. Remember down here? I got to bring that right up there. Oh. Come on. We need to bring this up here. The mid comes up. Because these moved right before the open from here to here in the last minute or so. So the statistics are there. They are just statistics. They are certainly not hard and fast lines in the sand, as we've discussed ad nauseum. And I'm going to not worry about this little nit-nat shit here. This little, 1 point jigs and jogs. And we were up here at 1 point, and now we're not. Obviously, I hope it's obvious that the POC is pretty volatile in the opening stages of the market because there's a hell of a lot of volume coming through. We're already up at about 269,000 contracts right here. What do you think? I think that's higher. I think that's about 110% volume for this time of day. Let's look. Oh, am I ever wrong? 81%. Look at there. How the hell did I get that so goofy? I'm going to readjust my thinking cap here, I guess. So we are at a light volume so far today for this period of time today, and we're down at 3.75 ATR on a 5 minute. Let's put this at a 1 minute and see what happens. Oh, wait a minute. Yeah, 1 minute. One time word that, what's this point and figure? I don't want that. The hell is that all about? Point and figure. What kind of craziness is that? Yeah, so there we go. This is for a 1 minute bar. So this is the average true range for 1 minute. There's 3 points. 3 1/4. Okay, let's get back over here. We're in familiar country. Back to the book map. Well, if you had to ask yourself the question, what is the context so far? There should be absolutely no doubt it's up. There you go. Okay, let's see what the snake's up to. I used to trade crude, and I used to trade NASDAQ or the snake. And I got involved in the TLab and Static, and the volatility and the liquidity of the ES is pretty hard to beat for the kind of trading that I do and the time frame that I trade in. So welcome to the stream. Smack a thumbs up, subscribe. That'd be really cool. I'm only in this I didn't get to this in the pre-market because I'm still sleepy, but I'm only in this for the subs and the likes. The purpose of the stream, as I said, is a permanent, transparent record of my trading every day from 8 in the morning till 1500 in the afternoon that I can review myself. That's the point of it. I'm not monetized in any way, and sure, if YouTube wants to give me a pile of money every week, I would be tickled to death. But who wouldn't? You've heard the old gift horse in the mouth thing, right? But that's not where it's at the moment, and so I will continue to use this. This is my virtual journal. And I did this kind of for 2 or 3 reasons, but one of the main reasons is I don't multitask well. And I believe journaling is important, so I wanted to do that. But I also realized that focusing on trading is that's the key to trading, right? So this way, I don't have to be doing screen snaps and typing and doing all that other stuff. I can just do the stream and narrate continually. And there you go. That's why I'm not active in chat rooms and all that kind of stuff either. Same idea. I want to focus on the market and the stream. Now, the trades that I'm vetting at the moment, and vetting means that you identify a setup and the parameters that validate an entry, and you collect a statistically significant data set of that setup and those exact parameters, and determine mathematically, statistically, if it has an edge or expectancy or not. If so, then that goes in your playbook and away you go. Now, I'm doing the initial balance trades, of which there are 2. Also, as we've described earlier, or talked about earlier here in the stream, the initial balance doesn't set. The IB high will keep going up with price. The low will keep going down with price until 9:30. At that point, the initial balance statistic becomes active, and now I can zoom in and take it from there. And that's how I believe. That's my approach to this whole business and trading. And it's not my way or the highway either, by the way. This is what I'm doing. And sharing openly my setups, my back testing, my everything. Because I don't believe that the few people that are watching this stream, and myself, think about the market is such a random environment. There are millions of traders all doing something at the same, simultaneously, who knows what. Okay, so it's a random environment. If you try to say you're going to predict something, you're setting yourself up for failure, which is not a good idea. And it is a statistical fact that the outcome of the next trade is 50-50. This is a coin flip right here. What can the market do? Tick up or tick down? Doesn't go at an angle, doesn't go sideways, goes up or down. We put horizontal movement on it with time. So the sooner you get your head around the fact that it is a random environment, the outcome of the next trade is 50-50, and then you collect some statistics over a substantial data set and determine if that setup has an edge or not, and then you apply that setup every time the edge every time the trade presents, and you rely on the law of large numbers to manifest your account, your balance. So here we are, coming up to 8:51. Remember, we've only been in the market 20 minutes, right? And we've got a 33 to 55. We got a 22 handle range, pretty wide. But what's happening here? We had a little bit of a burst to the upside, and now we're just rotating, eh? Something is wrong here. This cannot be correct. I haven't redone the micro composite properly. The micro composite VPOC is 66.95. And that's as of Friday. So this is going to be 66.95.0. And this is going to be the 17th. Sorry about that. I was busy doing, I don't know what the hell I was busy doing over the weekend, but I wasn't busy doing the right stuff here. That's for sure, was it? Isn't it? Sorry. Actually, I know what I was doing exactly. I've been exercising every day. I go for 4 or 5 miles every day. And this was our daughter's birthday. She turned 18 yesterday, our little baby girl. And, we have honeydew stuff every weekend, so I just didn't get going here. And there's a big thing that's happened in my trading, which I'm not sure how to go about it, describing it, whether to make a separate video about it or what, actually. But 53. I've switched over from how I was funding and trading to a different thing. I'll talk about it in a second, but we're getting ready to have another. I'm trying to stick to my time frame that I'm using my timestamps because they still haven't fixed that tool that I use to plug in for OBS, and it's really a pain in the ass. And you can appreciate the importance of having an accurate timestamp in chapters in the stream that's 7 hours long. I mean, I'm certainly not going to listen to 7 hours of it, and I wouldn't expect anybody else to. But if you want to know where he said what, or we talk about the IB statistic or whatever it is, then I want to have those timestamps be accurate. And let's discuss something that's really important here, which is the random risk thing that I mentioned earlier. First with the news, we know that there's no, this is earnings. That's basically nothing today. I mean, yeah, here's the reports, nothing. So let's look at the critical, the potential critical risk that we don't know about. And I want to be real clear that I make no political comment one way or the other. I have my own personal feelings, right? But so does everybody. But in any business, the first thing after you get the business initially established is you identify any potential risk to your business. And you make a mitigation plan for that. If you're a project manager, that's one of the tenets, all right? Well, why do we track non-farm payroll? Why do we know that the first Friday of every month at 7:30 in the morning, we're going to have non-farm payroll? Because it is a critical risk. But it's not unknown. We know when that's going to happen, and we can plan. What is my risk mitigation plan? Be out of the market. Be flat. Now, in this environment, we are subject to unplanned, scheduled critical risk, just like last Friday. 10 o'clock in the morning, Trump tweets something on that social thing of his, and the market dumps 221.25 or 75 points out of no place. Down here, we just had somebody say something at 7:45. Okay, that doesn't seem to have been too big a problem, but that's not scheduled anywhere, right? This was not in the schedule an hour ago. Now it's here, so fortunately, they're trying to keep up with this stuff, and it's not anybody's fault, you know. If there's something scheduled, they get it in, and we know to plan for it. But what I'm talking about is that unplanned for, non-scheduled, potential critical risk, just like last Friday, is a perfect example. So what do? What's the point of this conversation? The point is, really be aware and minimize the amount of times you expose your account to market risk, and only do so in vetted A+ setups. That's my story, and I'm sticking to it, by golly. That's really important. I hope I got that across correctly to anybody that's listening. Obviously, I understand it, but, you know, that's really important. One other thing here that we could talk about. So, yeah, I'm not sure how to go about this exactly. I want to be sure that I am just putting this point across as a warning, or as a heads up, and completely factually, not any kind of emotional or any kind of slant to it. But if anybody's been around the stream much, you'll know that I had been this was a 0 to hero record of a Topstep evaluation from the 0 to hero to live. Well, in August, they decided that they were going to only support their new Topstep X, which is a Program X thing. You can Google about that if you want to. And they were not going to, they were no longer going to offer Rhythmic or any of these other data feeds or trading stuff, which is what I have to have here to trade the way I trade with Bookmap and IRT. Various snafus happened, and it became, and I had 5 Topstep accounts, 4 of which were trade copied because that was kind of fun from this one that you see. And they were all in good standing. They were about one positive risk neutral trade from going from the evaluation to the XFA, where you can withdraw payouts, and then on to the live. Well, at one point in August or September, the accounts disappeared. I couldn't log on. So I got on the email and all of these things. Oh, yes, we're sorry. Yeah, you haven't broken any rules. We'll support you. Continue to trade. They reactivated. Everything was normal. And I asked specifically, what happens if I go to the XFA and then to the live account? Yeah, no problem. Well, as long as you do that, you haven't broken any rules. You know, we have an agreement with you. That's what we're going to. We'll stand by that agreement. Well, last week, I think, it happened again. Just all the accounts are closed. And the administration says, well, we thought about it and we're not gonna support those anymore. Sorry. So months of work adhering to good trade practices, no rules broken, no resets taken, everything correct. All in the 2,500 plus range of a 3,000 profit target, gone. All the money, all the trade, all the time, consistency rules, everything was great. So I have decided, I am obviously would warn anybody away from Topstep, because somehow or another there somewhere they had a philosophy change where they just decided to screw everybody like me and not honor their contract or their word. Real disappointing, obviously. And so now I have just given up on that whole concept, and I think that they were the only prop outfit that I thought was even worth thinking about. And I have been associated off and on with them and funded once or twice since about 2014 or 15, so 10 years. Makes me sick to think about it, but yeah. So this is an AMP account now while it's being funded. Now this is just the data. So this is basically that's what the trading will be going forward. There's no multi-copying, trade copying, or any of that stuff. In case you noticed that didn't happen, and that's what it is. So my bottom line is, unless you're comfortable trading with Topstep X, video game, very, very immature, immaturely developed platform that has been put forward by an outfit that supported FX traders. And I know from experience that they've got an A book and a B book. They can slow down your fills. They can do all that stuff. If you're comfortable with that, there you go. I would never recommend anybody go to Topstep. Again, it's really disappointing. Imagine 10 years of 10 years of association there. So that's that. Now what? Well, that's about it. Well, we've rolled over 9 o'clock, and what does that mean? It means it's 9 o'clock. And they continue to push that IB higher, eh? Okie dokie. Smoky. Robinson and the Miracles. Let's go. Let's show, let's rodeo. So, as I said earlier, I am working the initial balance trades. And there's a couple of things that are pretty important. The first of which being the definition of the initial balance, right? You know, as I hope I've gotten across, the IB high continues to go up with price like it's going to do right now until 9:30. The IB low is doing the same to the bottom side. And, you know, obviously today we're only going one direction, and that's up. There is no such thing as an IB stat or an IB statistic until 9:30. However, let's assume that it's 9:30, and I'll just kind of describe how all that comes together. What it says is, the way it works is, at 9:30, the high will cease to move. It will be locked at the top, and the IB low will be marking the lower side. There is greater than 97.7% probability. Think about that. 97.7% probability that the IB high or the IB low will be revisited by price at some point in the balance of the RTH trading session, sometime between 9:30 and 1600. That's the statistic. And that statistic is the case for all four open types. 97.9 on the gap down, 97.7 on the gap up, and 98 and 98.3 on the two insides, right? That's one hell of a statistic, you'll have to admit. If you want to think of it the other way, 2.3% probability, 2.3% probability that neither the IB high or the IB low will be exceeded by price. Now, two things to say. You don't have any idea at what point or what time that's going to happen. It could be 1 millisecond after 9:30. It could be 1 millisecond before 1600. That's one thing. Secondly, it's not 100%. And interestingly enough, about 3 or 4 weeks ago, and I'm sorry I didn't remember the damn date, it was a Friday, we did not take either one. We achieved the 2.3%. We did not achieve the IB high or the IB low at any point in the balance of the trading session. And if you look at the statistics, you know, yeah, it's a 2.3% probability that we will not. Not 100%. So that's the IB stat that I'll be watching for at 9:30. And there you have it. Okay, so let's take a look at what I am doing now to do with these IB trades. And that brings up the world famous backtesting. Let's just close this off and this off. I was working on this before the market opened. This is my backtesting chart. These levels that you see here are custom indicators that I built. And going on here. Oh. Oh, I know what's the matter. Watch this. Boop, gap up. I'm going, what the hell happened to the day? Anyway, you'll notice that there are a set of levels around the IB high and a set of levels around the IB low. Okay? There are two trades associated with the initial balance statistic. One is the IB failure, and the other is the IB continuation. And they are pretty self-explanatory, I think. Now, it might be easier to think about it this way. The IB failure is where we trade up to the initial balance, take it out, can't get any higher, and come back towards the mean. In other words, we trade up here. We can't get anywhere. We take the statistic, but we can't get any traction, so we mean revert back to the center. Same would happen for the IB low. The IB continuation is, guess what? The other way around. Goes up here, we take out the IB high, we come back, and we just launch, okay? Now, each one of those trades is suggested by context. And think about it. It makes sense. The IB failure is nothing more than a mean reversion trade based around the initial balance level. And the IB continuation is just that. It's a continuation trade based on the initial balance level. So if we have a balanced or a rotational day, you would expect the IB failure. And if we have a directional day, I would expect the IB continuation trade. What are we doing now? What is context now? Pretty definitely up. Higher highs, higher lows so far. It is balanced here because there's been a lot of trade around here. Remember, the POC is just the point at which the most contracts have traded so far in the session. And all this jumping and jiving around here is driving me crazy. But, you know, I would anticipate that we would have a continuation trade based on context. But I'm not making any hard and fast rules. And I'll get back to the backtesting thing and the way this is all working now. These are my backtest rules for the initial balance trade. And let me also say that the levels and lines and signal markers on this chart are not connected in any way to the system, the trading system, except that they absolutely accurately represent the rules and the levels that the system uses. This is simply for me to have a visual confirmation. Is this happening where I think it should, when I think it should, when I expect it to? Okay, now one thing you'll notice, I hope, where the hell is the initial balance and stuff? I see it over here, but I don't see all your levels and lines. Why? It's not 9:30 yet. They don't start plotting until they're supposed to. If I see some, trade signal out here, I'm going to go, that's not right. Okay? So what I've been doing is, and I'll now scooch this over so you can see these trade signals, I hope. There you go. These are some of the rules. Now, I will say at the get-go that I do not worry about, in this chart, I don't worry about coding these signal markers so that they only fire sequentially. They do very definitely do that in the trade system, but they don't here. I know, because this is me watching this, I know that I need an A before I have a B, and I need an A and a B before I have a trigger. Here's an A, here's a trigger. Well, that's no good. That's not a trade because there's no B here. There's no IB continuation long B. And I need those three rules, and I need them in that order. Okay, so there you go. Now, what I'm going to do is, as we get over here to the, come on, I can do that this way. There we go. Okay, there we are. Now, what I'm going to do now is I'm going to bring this up so it's, make it a little bigger so it's easier to see. Spread it out a little bit. Okay. When we get to 930, you'll see those levels starting to plot. And what I've been doing is I've been visually trailing this chart and mechanically taking those trades on Bookmap. With a bit of discretion in that I don't go counter trend or counter context. The backtest itself, there is absolutely no discretion involved. The system runs through every one of these rules over every 1 minute bar and evaluates them. Takes a trade or doesn't. And that's how that works. And here's the beautiful part about all that. Let's set up the back test. I was looking at 500 days back. Let's just do it for 20. 20 days back. Okay for the back test, and let's back test it. Watch how long this takes to review every 1 minute candle over 20 trading days. Oh, took a second. Yeah. So over these 20 trading days, we took 28 trades, 13 long, 15 short. Maximum winner $750, which is exactly right for my setup. I'm using this system uses the 2-lot risk neutral trading package that I set up and I have queued up in Bookmap and that I went through in the pre-market. I took 12, there's 12 winners and 4 losers. The R value here on this is 2.2 and 42%. Now, because IRT wasn't built, this report wasn't built to compensate for multi-scales. It was just all in, all out. It's not exactly right. So what I've done here is this, which is a little Bookmap, a little thing that I've done here. So we have a total of 28 trades. Wasn't it 20 days or something like that, I think? I don't know. We took 12 wins. We took 4 losses. Average loss is 300. Average winner is $750, which is correct. And what does that tell us? Well, that tells us we've taken 1.4 trades per day. We have a profit factor of 3. We have a win rate of 64.29, a loss rate of 35.71, and expectancy is $375. Boop. But this is not a statistically significant data set. This is only however many days it was, I forgot. 10, 20, okay? That's not statistically significant. Because it's outside the possibility of random distribution. We had 7 winners and 4 losers. Oh, 2 losers, I'm sorry. But that's not a large enough data set to be outside the possibility of random distribution. But that's how it works. And if you're, if you really want to get into it, this is, you can code and look at every trade, the time, the date, the entry, the outcome, every one of them. And you can go back over 1,000 days if you want to. So that's where I'm at for backtesting. We are now approaching the IB statistic being set. Notice that we've put in another IB high here. Has nothing to do with the statistic. This line will move up here, so will the flag, because it's not 930. I hope that's clear. And what I'm going to do now is back over on IRT. I'm going to maximize that chart like this, so we can really watch exactly what's going on signal wise and trigger wise and all that. Also, when we're looking at this, notice that I've tried to code and keep everything consistent between IRT and bookmap. The developing VPOC is the same yellow line. It's dancing around. The POC's red. The IBs are green. All of that. Tried to be consistent there, as is over here. One other thing that'll happen here in a minute, after 9:30, when the IB statistic becomes hot, you will see the levels that I use for the basic pullback zones will push across the bookmap. You'll see a CR IB high, IB high, low, and vice versa. Yeah, my naming conventions are goofy, but I try to name them something that makes sense. The CRIBHH means continuation range, IB high, the higher of the two levels. Pretty obvious, pretty simple to me, but can certainly, absolutely sure it's confusing somebody else. So here we go. 2 minutes till the IB sets. They continue to go up. This will jump up again. We've got 155 contracts sitting out here at the 65 handle. That's pretty interesting. Then, here we go again. Rational exuberance to the upside. Does this mean somebody's talking? Probably. Probably so. Okay, I hope I explained everything clearly. And if I didn't, well, oops. Oops. Now, I have no, I guess a little side, well, we're at a minute, yeah, but I have no problem being disciplined about trading, which is maybe, which is pretty handy. I have a philosophy about that we can talk about later, but so I'm only interested in the two initial balance trades. And what do we have now? Well, what is happening? What would you say the context was if you just had to look at that bookmap chart? Here's where we opened, right here, right? Here's our open. And there we go. Now, if I wanted to be a really clever, typical, there we go. Now you see that it's 9:30 and we've just had everybody come online right here. And in a second, well, 30 seconds, I suppose it'll be. You'll see those same levels plot right here on either side of the initial balance I. Now the statistic is live. And let me point out that it's really important not to trade to the statistic. And what in the hell do I mean by that? Well, oh God, we're above the VWAP, we're above the mid, we're close to the IB high. Just know we're going to take the IB high to get long. No. And I have the proof, and I am living proof of that. That's a no-no, because now you see that we have the continuation and the pullback zones that have now plotted across from the chart. So here you go. Didn't take the IB stat. You got all long right here at, you're all warm and fuzzy at 63. And what's happening? You're stopped out right here. Oopsie doopsie. There's no statistic yet. There's no trade possibility yet. And I can kind of like that, some of the other stats in here, I have not taken the statistic, captured it, and I'm not interested in doing that. It's a lot of work. I can't tell you the number of times that this kind of thing has happened. It'll do this, and they'll come all the way back to the VPOC, or they'll go down and take out the IB stat on the bottom side. You never know. It's random, remember? There's millions of people reacting to this right now. Hell, you can't get 50 people to agree to something in a school board meeting, let alone millions of them on a trading screen. Think about it, darling. So here we go. Now, what have we got? Well, you see that we pulled back within these pullback zone, and that means nothing. Here are the levels. Here are those levels, and there's our pullback. There's a trigger because we did get up to the trigger zone. This trigger zone with these little dots, I don't bother plotting them on Bookmap because it's just 1 point above or 1 point below the IB on either IB high or low. So, I don't need a bunch more lines and crap going on Bookmap. It's getting too crowded over there for me now. So here we are. Why does none of this mean anything yet? We haven't taken the initial balance statistic. We do not have an A. I do not have an A. I hate that, and I don't know why. I think everybody kind of does it. I know I do it subconsciously. Here we have a B, which is meaningless because there's no A. And that B may go away because it's based on the close. At the moment, the close is within the pullback zone. If it stays there and the candle closes out, or at that point, then we will have that B. But it's meaningless because there's no A trade yet, A signal. And you see, we don't have it because it closed right on the level or above it. So we don't have a B signal yet. So there you go. Let's get back to the point at hand over here. What else am I missing? I don't know why this is doing that, but I'll just put it in there. Hell with it, I guess. It makes sense. 134. Why is it doing that? The time seems off on my timestamp thing. Boy, I wish that kid would get there. The fella would get this thing fixed. It's so flippin' irritating. I mean, it was such a handy thing, and then wasn't thinking, and I clicked update OK to update OBS, and it went to a new version, which is 30. In case you're using OBS, watch 32.0.1. That 32 version tipped over a whole bunch of stuff. The one plugin that I used in particular. Okay. All right, so now we do have a B signal because this bar closed within the pullback zone. We have the down trigger because this bar reached the trigger zone. And we have the B, both of which are meaningless because we don't have the A signal. I hope that's clear.